The US economy continues to send mixed signals. The latest July 2025 jobs report shows a slight increases in unemployment, but steady wage growth. So, what's really happening in the labor market, and could this push the Fed towards a rate cut? Let's break it down. Title cut versus B-roll of people commuting, working, job interviews. According to the Bureau of Labor Statistics, the US economy added 1,57,000 jobs in July, a solid number but slightly below economists' expectations of around 1,80,000. The unemployment rate ticked up from 4.0% to 4.2%, the highest level since early 2023. Most of the job gains came from healthcare, education, and hospitality, while sectors like manufacturing and tech shows stagnation or minor job losses. Graph showing job growth by sector, unemployment line chart. Analysts say this slowdown suggests the job market is cooling but not collapsing. Despite the uptick in unemployment, wages continue to rise. Average hourly earnings increased by 0.4% in July and are up 4.3% over the past year, outpacing inflation, which has now cooled to around 2.5%. Footage of retail workers, nurses, delivery drivers overlay wage charts. This wage growth reflects a tight labor market in certain sectors, especially service, healthcare, and logistics. But some employers are showing hiring to control costs, and job seekers are noticing longer application timelines. Labor force participation also rose slightly to 62.7%, suggesting more people are re-entering the workforce, including older workers and recent graduates. This makes a signal put the Federal Reserve in a tough spot. At its last meeting, the Fed kept the rate unchanged at 4.75%, signaling a data-driven approach. Now, with unemployment rising and inflation easing, some economists predict a rate cut could come as early as September. Jerome Powell speaking at press conference overlay quotes from Fed statements. However, others warn that the Fed may wait for clearer signs of economic slowing, especially since wage growth is still strong and consumer spending has not dropped significantly. Inserts soundbites of quotes from economists e.g. Goldman Sachs and Brookings etc. Fed Chair Jerome Powell said last year, quote, we are watching labor market dynamics very closely. It's too early to declare victory over inflation or risk instability by moving too fast. Markets respond with cautious optimism. The Dow Jones and S&P 500 edged up slightly on Friday as investors interpreted the report as a potential sign of coming pivot from the Fed. Meanwhile, 10-year Treasury yields dipped below 4%, reflecting increased expectations of a rate cut. NYSE footage, stock tickers, Bloomberg terminal visuals. Looking ahead, all eyes are on the August jobs report and the upcoming Jackson Hole Economy Symposium, where Powell is expected to outline the Fed's next move. So, what does this mean for you? If you are a job seeker, expect a more competitive market but rising wages in key industries. For borrowers and investors, the possibility of a Fed rate cut just got more real. We will keep tracking the data, the markets, and what it means for everyday Americans. Be sure to like, subscribe, and hit the bell icon for your more weekly economic updates.